Level 1. The Origin. You are 24. You owe $38,742. You live in Cleveland. Your checking account shows $47.12. Your phone buzzes. It is an overdraft alert. You pay $35 for nothing. You work nights at a warehouse. You make $19.50 an hour. Your student loan letter says $12,000 due. Your rent is $1,100 next week. Your fridge holds ketchup and hope. Your chipped blue coffee mug steams weekly. Your cracked iPhone screen cuts your thumb. You scroll job boards at 3 a.m. You see a listing. Chase Bank needs tellers. Starting pay is $21 hourly. Benefits include 401k and FDIC training. You apply in the break room. You get an interview next day. Your manager wears a navy blazer. He offers you the job. You accept for $43,680 a year. You learn your first rule. You learn the bank never sleeps. You learn money moves without you. A year passes.
Level 2. The Commitment. You are 25. You are a teller. You wear a light blue shirt. Your trainee tag hangs crooked. Your station is window 3. Your drawer starts with $10,000 cash. Your chipped blue mug sits under the counter. Your cracked phone stays in your locker. You process 147 transactions daily. You smile at every customer. You cash checks for $842.17. You take $1,200 deposits. You notice the gap. You lend that $1,200 at 7.5%. You pay the depositor 0.01%. You keep the spread. That is net interest margin. That is $89.88 profit per year, per customer, times millions. You learn about fees. You learn about overdrafts. You learn about float. A woman overdrafts by $6. She pays $35 fee. She cries quietly. You must charge her. You do it anyway. Your supervisor nods. You get Employee of the Month. It pays $100 bonus. Your credit score is 612. You start reading disclosures. You start understanding the game.
Level 3. The Test. You are 27. You are a personal banker. You make $58,000 base, plus $8,000 commission potential. Your office has no door, just a small desk. Your chipped mug now holds pens. You must sell checking accounts, savings accounts, credit cards at 24.99% APR. You meet Maria. She earns $52,000 yearly. She wants to save for her kid. You offer a $25 monthly maintenance fee account, unless she keeps $1,500 minimum. She cannot keep $1,500. You know this. You sell it anyway. Your quota is 18 accounts monthly. You learn interchange. Every swipe pays the bank 1.5%. A $100 grocery trip gives $1.50 to Chase. Free money. You learn about credit scores. You learn about debt traps. You learn about upsells. A man asks about mortgages. You quote 7.25% for 30 years. You know bank will sell it. Fannie Mae buys it tomorrow. Bank keeps 1% origination fee. That's $4,200 on $420,000 loan. No risk held. A year passes. Your score hits 695. Your girlfriend says you sound different.
Level 4. Rising Trust. You are 29. You are assistant branch manager. You make $74,500 salary. Your branch manages $42 million in deposits. Your suit is navy now, clean, pressed. Your chipped mug is gone, replaced by a $28 corporate tumbler. Your cracked phone is now an iPhone 15, $999, financed through the bank. You manage 6 tellers. You approve overdrafts. You deny overdrafts. Power feels small. Power feels huge. Your wife is pregnant. First child due in 5 months. You need health insurance. You need the bonus, $12,000 if branch hits target. You push overdraft protection. It costs $12 monthly. It sells safety. It sells fear. You see float in action. Checks take 2 days to clear. Bank invests that $42 million overnight at 4.5% Fed rate. That is $5,178 per day for doing nothing. You learn about minimum balances.
You learn about dormant fees. You learn about customer inertia. Your daughter is born. Her name is Sophie. You hold her. You think about her college fund. You open a 529 at your own bank.
Level 5. The compromise. You are 32. You are branch manager. You make $96,000 plus $25,000 bonus. You control $88 million now. Your office has a door, glass walls. Your tumbler is stainless now, engraved. Sophie is 3 years old. Your wife works part-time. Mortgage is $2,340 monthly on a $415,000 house in Parma. Rate is 6.89%. You approve loans. You deny loans. You know the secret. Deposits are not stored. They are loaned. 90% goes out again. $88 million becomes $79.2 million in loans at average 8% interest. You pay 0.4% on savings. Spread is massive. You learn about wealth management referrals. You send rich clients upstairs. You get $500 per referral. Client pays 1.25% annual fee on $500,000. That is $6,250 yearly, forever. You start excluding people. You profile zip codes. 44105 gets subprime offers only. You hate yourself a little. You buy a $45,000 SUV to feel better. A year passes. Your marriage feels tight. Money solves nothing.
Level 6. Becoming indispensable. You are 36. You are regional manager. You oversee 12 branches. $740 million under you. Salary is $142,000. Bonus is $68,000. You drive a leased BMW. $699 monthly. Your suits are charcoal, tailored. $1,200 each. You rarely see customers. You see spreadsheets. You see fees. Overdraft fees alone are $12 million yearly. For your region. From people with $47.12 balances, like you once had. You understand investment arms. Your bank owns a brokerage. They sell mutual funds. Expense ratio, 0.85%. Customer thinks bank is safe. Bank collects. You learn about mortgage servicing. You learn about securitization. You learn about interchange premium. Rich clients use cards. Bank makes 2.5% on their $8,000 monthly spend. That is $200 per rich client, times 40,000 clients. You miss Sophie's recital. Again, your wife stops asking. Your chipped blue mug appears in a memory. You threw it away last year. You wish you hadn't.
Level 7. Consolidation. You are 41. You are Vice President, Retail Banking Division. You make $215,000. Bonus, $110,000. Stock options, $90,000. You live in a $680,000 home. Your office is downtown, 28th floor. You manage $4.2 billion. You do not count cash. You count basis points. 1 basis point is 0.01%. On $4.2 billion, that is $420,000. 1 tiny point. You build new products. A premium checking account. $35 monthly fee. For free airport lounge. Lounge cost bank $8 per visit. Customers visit twice yearly. Profit $34 monthly per customer. You approve algorithmic overdraft sequencing. Largest transactions clear first. Empties account faster. Triggers more $35 fees. 3 fees in 1 day. $105. Legal. Profitable. You learn about data sales. You learn about cross-selling. You learn about loyalty as leverage. Sophie is 12 now. She asks what you do. You say you help people save. She believes you. For now. A year passes.
Level 8. The Reckoning. You are 47. You are Senior Vice President. You make $385,000 total compensation. You sit on Risk Committee.
You oversee $11 billion in deposits. 2008 repeats quietly. Rates rise to 5.25%. Borrowers default. 6.7% of your subprime portfolio fails. That is $42 million in losses. But you already sold loans. Fannie Mae holds risk. You kept fees. Your CEO praises your foresight. Your team cuts 84 jobs to preserve margin. You fire your old teller manager. He is 58. He cries in your office. Same office where you got Employee of Month. You give him severance. $8,500. 2 weeks' pay. You go home to your $890,000 house. Your wife sleeps separately. Sophie is 18. She wants to study economics, to fix banks. You laugh bitterly. You check your 401k. $612,000 balance. Your cracked phone from H24 sits in a drawer. You kept it. You charge it sometimes. Screen still glows.
Level 9. Succession. You are 54. You are on executive committee. You make $620,000 plus $400,000 equity. You help decide everything. Interest rates, fee structures, branch closures. You close 22 branches in Ohio, mostly in low-income zip codes. Saves $9.4 million annually. Costs community access. Shareholders cheer. Your name is on the lobby wall. You endow a scholarship, $50,000 yearly, for financial literacy. Press release calls you community leader. You know truth. Banks make money 6 ways: spread, fees, interchange, float, origination and sale, wealth management. You use all 6 every day. You try to teach Sophie. She is 25 now. She works for CFPB in Washington. She regulates people like you. You are proud. You are ashamed. You both know. You offer her a job. She refuses. She says money should serve people. You say banks serve shareholders, legally required. She hangs up. Your tumbler sits empty. A year passes.
Level 10. Resolution. You are 61. You retire early. Net worth, $4.3 million. Mostly bank stock and 401k. House paid off. Health declining. Slight limp. Reading glasses. Your office is packed. Cardboard boxes, $12 each. Your replacement is 29. Hungry, sharp, wears a navy blazer. You give him advice. Be kind. He nods. He does not listen. You drive home at 2 p.m. Traffic is light. Sophie visits with her baby. Your granddaughter, 8 months old. You hold her. Tiny hands. Huge future. She will need a bank account someday. Her first account will have fees. Her first card will have interchange. Her first loan will have spread. You think about your first $47.12. You think about your $35 fee. You think about the cycle. Outside your old branch, a new kid waits. He is 24. He wears a worn gray hoodie, black joggers, scuffed sneakers. He holds a resume. His phone shows $47 balance. His eyes are tired. He wants a teller job. The cycle continues.